Dow Jones up 70% above the March 2009 lows. We're well above that key 11,000 level, in fact reaching 11,100. So things looking quite good coming through from the US. Google came out with some numbers yesterday, beating expectations, but it seems that investors were expecting a whole lot more, and this adding some pressure to Asian markets today.
Yeah, the Google numbers are kind of strange. I think it was more the fact that Google is one of those companies where you can't trust the CEO to do something that's best for the actual shareholder. He has all these dreams about different businesses, etc., and they think that perhaps because the hard times are over, Google's going to go back to a situation where they're going to be acquiring things. And I don't know if you recall back last year when they had the crisis, or the depth of the crisis, the Google CEO was coming out and not talking about his advertising business, but talking about renewable energy and sustainable development, etc., and that's one of the problems with Google. When the times turn too good, they turn to other things, and maybe I should take the eye off the ball.
In terms of the US earnings that we have been seeing coming through, I mean, we had JP Morgan, which of course many investors were quite happy about. We had Yum yesterday, also came in better than expected. Intel earlier in the week. Taking cue from what we've been seeing from the most recent earnings, do you think that these numbers are sustainable? Do you think it's mostly due to a lot of cost-cutting measures?
Well, I think actually, looking at some of the numbers, for instance, Intel did well, AMD came out with results as well yesterday, and in those cases you'd find actually the revenue wasn't doing that bad as well. Even though companies are more efficient, yes, they have cut costs, but they are actually seeing some revenue increases, so that's actually very good for the future. However, one must remember that this is all based on massive amounts of fiscal and monetary stimulus, which have to be reduced. And in fact, the housing stimulus in the US is being reduced to a certain extent quite soon. They're talking about possibly reducing, stimulus in China very soon as well. And one has to see whether or not this demand holds through this reduction in stimulus.
We keep talking about this jobless recovery, and it seems that that is exactly what we're seeing. We had jobless benefits rising 484,000 last week, the highest level since late February, and we had expected claims to fall by 440,000. So the market basically ignored this information and focused on the fact that the manufacturing surveys came in far better than expected, and of course focused on US earnings as well. In terms of when we'll be seeing things starting to ease on the unemployment front in the US, Viv, are you confident that things will get better from these levels onwards?
No. The fact of the matter is, if we had to go back to the exact level in terms of production that we had before the crisis, we would still have less people employed because people have gotten more efficient. Businesses have cut down the least efficient employees, and they kept the most efficient employees, and therefore they are now able to make more with less, basically, in terms of labor. And so we are going to see a situation where businesses, even if they have more production, are not going to use as many employees. And secondly, businesses are always averse to hiring people when they don't know for certain that the demand is going to continue. I mean, Google did come on and say it's going to be hiring more people, but I don't think it's going to be in the same kind of vein it was in the boom years when we were quite confident that we're going to have increased demand going into the future. Right now, they might be looking more towards overtime, towards other kind of measures to actually increase production as opposed to hiring more laborers.
Turning our attention to the euro, and given by the euro's performance this week, it seems earlier in the week we thought that Greece's debt worries were over because the euro rebounded quite nicely, and now we're seeing Greek bond yields coming under pressure once again, and we are seeing the euro starting to lose slight ground, and it seems that Greece might be tapping into that $30 billion or euro rather lifeline from the eurozone, and of course 10 billion euros from the IMF. Do you think that we're going to be seeing some euro pressure coming through over the next few days?
Possibly. I mean, you might have fluctuations going through over the next few days, but I mean the kind of consensus at the moment is, given a 5-year outlook, there's quite a huge chance actually of Greece defaulting over the next 5 years or so, and that's the kind of uncertainty that we don't need in the market, and that's why you have this huge discrepancy between the Greek yields and the German yields, for instance. And in fact, if you look at the actual yield difference, it's actually higher now than it was before the announcement came out, which is kind of strange. So I think the market is not looking at this rescue package with a great deal of confidence going into the long-term future of Greece. So that's something you have to worry about.
Of course, it's not so much about Greece only needing this aid package. The question is, who else is going to need it down the line? Because it is about servicing your debt at the end of the day.
Yes, I mean, Greece is only bad. Greece is only about 2% of the European economy, so it's not going to be a major, factor on its own. But the fact that Greece yields also increases the yields of Portugal, also increased the yields of Spain. That also means that those countries have troubles borrowing money to actually finance their debt. And the problem is that Spain, for instance, is vastly larger than Greece. It's a 10 times larger economy, effectively. And if that country goes down, then you have a real problem for the European Union.
JSE ALSI 30,000 in sight at this stage. We're currently at 29,565 points. Viv, what is going to push us higher from these levels? I mean, we're seeing gains coming through on the Dow breaching that key 11,000 level. We're hitting new highs in Asia, even though we are seeing some pressure coming through today. Commodity prices looking relatively strong as well.
It's earnings. I mean, we are in earnings season, and if a company has good earnings, no matter what the economy is doing, it's going to go up in price. And so we see this strong, estimate beating earnings coming out of the US, out of other countries as well. You are going to see prices go up, and you are going to see our stock market doing well. The only question arises, as I mentioned earlier, is that how much of this improvement is based on stimulus packages. And second half of this year, if we do see a second downturn, you do see a double dip recession, these numbers obviously are going to be something that we consider back and say, oh my God, I should have sold here.
Well, Viv, there is a raging debate about whether we'll be seeing a pullback or whether we're going to run further. What are you doing right now? Would you be suggesting investors to sell at these levels?
Yeah, I think take some money off the table at these levels. I mean, we're getting very choppish. I do think we might have a few more weeks, especially if the earnings numbers of the US come out as good as we expect them to, or even better than we expect them to actually. So we are going to see some kind of upward pressure going. But I do think that there is a case for taking some money off the table. I mean, we had a massive run in the last year, and anyone that actually was in it from the start, from last year, March or so, should be thinking seriously about taking some of that cash off.